New York Social Security changes, cuts, closures, and electronic payments. Get ready for a shock. Your Social Security check might shrink, but there's a silver lining too. Recent changes to Social Security have sent waves through New York. While some updates promise tax relief for seniors, others threaten financial strain for certain beneficiaries. Here's the breakdown. First, the bad news. Under the DOGE program, perhaps a typo here, key Social Security offices in New York are closing. And this isn't just about physical locations. Staff reductions and office closures, including the White Plains office, closed May 31st, and Poughkeepsie location closing July 31st, have made it harder for recipients to reach human assistance. The linked AP News article, visit for full details, reveals this trend, raising concerns about accessibility for vulnerable populations. Now the good news. The One Big Beautiful Bill Act offers a major tax breaks for 88% of Social Security recipients. Unless you earn beyond $75K, $150K for couples, you're exempt from federal taxes, a game changer for retirees. Social Security Commissioner Frank Bisignano calls this a historic step to protect seniors during a recent Newsweek response. New Yorkers over 65 could claim up to $6K in tax deductions starting in 2026, though the relief expires in 2028. But here's where it gets controversial. While Biden once capped benefit clawbacks at 10%, even allowing some total repayment suspension, Trump recently reinstated 50% deductions for overpayment recovery. The Motley Fool highlights this abrupt policy shift, with notices sent April 25th. New Yorkers, your 90-day appeal window is closing fast. Expect repayment seizures if you've received these letters. Big changes ahead. Starting September 30th, 2025, the SSA will eliminate all paper checks, thought to affect less than 1% of recipients. Those still relying on mailed payments must switch to direct deposit or the Direct Express card, available for New Yorkers without bank accounts. The SSA blog explains this digital push aims to boost security and speed. What you might miss. Electronic payments for all? Not exactly. But for the 1% still getting checks, time is running out. Visit ssa.gov, my account, to update preferences before the cutoff. The debate rages on. Activists and unions rally for expanded benefits, but policy shifts show conflicting priorities. Should overpayment recovery seizure at 50% be seen as fairness for taxpayers or a harsh punishment for recipients? Where do you stand? Join the conversation in the comments. Additional reading: rising prices hit NY dollar stores. Medical license revocations spark debate. Links included as per original, but without markdown. Social Security overpayments. Up to 50% benefit cuts explained. Imagine receiving a letter from the Social Security Administration, SSA, stating that your monthly benefits are about to be cut by up to 50%. This isn't a hypothetical scenario for some Social Security recipients who are facing steep benefit reductions starting in late July 2025. But here's where it gets controversial. While some are seeing their benefits slashed, others are experiencing a sudden increase. Let's dive into the details of this complex situation. The SSA recently began sending out notices to recipients who had been overpaid in the past. For those facing cuts, the SSA will withhold 50% of their benefits starting approximately July 24th, 2025, until the overpayment is repaid. Recipients have 90 days to seek a waiver or lower repayment rate. However, the timing of these benefit reductions might catch some off guard, especially those expecting their next payment on July 23rd or August 1st, according to the SSA's payment calendar. Why are these overpayments happening? It often stems from incorrect benefit calculations by the SSA or beneficiaries failing to report changes in income. While improper payments accounted for less than 1% of the $8.6 trillion in benefits paid from 2015 to 2022, the SSA collected all but $23 billion of the nearly $72 billion in overpayments issued during this period. But here's the part most people miss. not all recipients are facing cuts. The SSA has been processing retroactive payments to public sector workers, such as police officers, firefighters, postal workers, and public school teachers, whose benefits were reduced in the past due to their work not being subject to Social Security taxes. As of July 7, 2025, over 3.1 million payments have been made, totaling approximately $17 billion. The average retroactive payment was $6,710. For those affected by overpayments, there are options to manage the repayment. Recipients can repay the overpayment amount using various methods, including credit card, online bill pay, or check. Alternatively, they can request a waiver to avoid repaying the overpayment if they believe it was not their fault or if they cannot afford to repay it. This situation raises questions about the fairness and transparency of the Social Security system. How can we ensure that overpayments are minimized while still supporting those who need it most? And what can be done to streamline the process for public sector workers who are entitled to retroactive payments? Share your thoughts in the comments below. How federal debts can garnish your Social Security in 2025. Avoid financial shock. How federal debts can lead to Social Security garnishments in 2025. Editorial note: we earn a commission from partner leaks on Forbes Advisor. Commissions do not affect our editors' opinions or evaluations. Social Security supports millions of Americans, but it isn't completely off limits. Many recipients assume their benefits are safe once they arrive each month. But that's not always the case. In some circumstances, the federal government can legally garnish your Social Security payments, especially if you've fallen behind on specific federal debts like taxes or student loans. Unpaid federal taxes. Since 2002, more Social Security recipients have become vulnerable to garnishment. Through the Federal Payment Levy Program, the IRS can take up to 15% of monthly benefits to cover unpaid federal taxes, even if that reduces payments below $750. There's no minimum protection in these cases. Previously, for non-tax federal debts like defaulted student loans, the first $750 of monthly benefits was off-limits under the Debt Collection Improvement Act. However, that protection no longer applies to most payments made after 2002, meaning even more of a retiree's check can now be garnished. Defaulted federal student loans. If you fall behind on your federal student loans, the government can step in to collect what you owe. It does this through the Treasury Offset Program, TOP, which allows it to take federal payments, including your Social Security checks. Before 2002, the law used to guarantee that you'd keep at least $750 a month after any garnishment. But now the government can take up to 15% of your Social Security benefits, even if your check is less than $750. This garnishment doesn't happen right away. It only kicks in if you default and don't work out a repayment plan or rehab your loan. Since Social Security is a lifeline for many retirees, this change means more people could lose a larger portion of their monthly benefits to repay student loans. Court-ordered restitution or child support. Federal law also allows Social Security garnishment for court-ordered payments like child support, alimony, or criminal restitution. These garnishments are often higher than the IRS cap, sometimes up to 65% of your benefit, depending on the situation. If the amount owed is large, or if you're already subject to multiple garnishments, such as for taxes and child support, they may see most or even all of your benefits withheld. This is especially important for anyone with unresolved legal obligations. Even if the original case is decades old, the courts can still collect from your Social Security as long as a valid order exists. Can regular creditors touch my Social Security? Most creditors, like credit card companies or medical debt collectors, cannot directly seize your Social Security benefits. When your benefits are sent straight to your bank account via direct deposit, the law says banks have to protect at least 2 months' worth of those payments from collection. But there's a catch. If your Social Security deposits get mixed with other cash in your account, or if your bank can't tell which money came from Social Security, those funds might not be safe from collection attempts. And if you receive your benefits by taper check, you don't have these same protections, leaving you even more exposed. To keep your benefits safe, Make sure your bank knows which deposits are from Social Security and closely monitor your account. To avoid owing the IRS, filing your tax returns accurately and on time is important. Keeping up with student loan payments and fulfilling child support obligations can also help prevent unexpected collections or garnishments. To easily file your taxes, the best tax filing software inputs your tax forms, identifies possible deductions, and provides access to experts when you need assistance. Bottom line, Social Security doesn't guarantee financial immunity. Falling behind on certain federal or court-mandated debts could shrink your benefits fast, especially if you're not proactive. If you're facing one of these issues, it's better to act early and seek help than to wait for a garnishment notice.